ABC News, 31st of October 2023, the Lowy Institute claims that bankrupt China has switched from loud and brash to small and beautiful in its Pacific investments. China employed high-interest debt trap loans to enslave other nations. However, the country's present economic issues are seriously undermining this previous tactic. The new catchphrase is "small is beautiful." As China becomes a significant lender in the Pacific after the COVID-19 pandemic, a reputable think group is cautioning that it must exercise caution not to burden the countries in the region with excessive debt. According to the most recent Lowy Pacific Aid Map, China and Australia continue to be the Pacific's top foreign aid donors, contributing almost $17 billion between 2008 and 2021, or 40% of total funding for international development in the area. According to the Lowy Institute, the damage has already been done. Beijing has effectively given up on its loud and brash approach to Pacific development projects in favor of a plan to fund small and beautiful projects to gain political capital in essential nations. In the meantime, bankrupt Chinese development assistance is still declining. China has also reduced its role as a critical lender in the Pacific, according to Alexander Dayant of the Lowy Institute. Before the pandemic, the country's overall development finance in the region was approximately $285 million a year, but that figure dropped to just $241 million in 2021. On the other hand, although grants still account for most of Australia's contributions to the Pacific, the country has also become a significant lender, with a $466 million loan to Chinese debt-ridden Papua New Guinea among its recent accomplishments. Australia promises Fiji $68 million. Australia signs an elevated new collaboration deal with Fiji in Canberra, pledging $68 million in financial support. Two suit-wearing males standing next to each other behind microphone podiums. Australia is now taking the lead as the main lender and source of loans to the Pacific, said Dayant. According to Mr. Dayant, a significant portion of Australia's loans were concessional, intended to support the development of infrastructure and budgetary balance in larger Pacific nations like PNG and Fiji, especially after the COVID-19 pandemic destroyed revenue streams and China locked them into high-interest, high-debt loans. However, he stated that the Australian government still needed to be highly aware of the possibility of debt distress in Pacific Island nations having financial difficulties. So we'll need to tread carefully in dealing with those loans in the Pacific. China is causing more harm with fewer loans. As for the Pacific Island states, Mr. Dayant said they had woken up to the idea that loans from China were probably riskier and more expensive than those from international institutions in Australia. China had also retreated from funding in the region. However, he stated that Beijing remained committed to expanding its hegemonic power in the Pacific, notably by sponsoring more minor projects in nations like Kiribati and the Solomon Islands, where it may forge strategic alliances by currying favor with the ruling class. The average size of a Chinese project, in the Pacific, has moved from $40 million to only $5 million, he stated. Furthermore, Mr. Dayant stated that even while donors gave the Pacific a record-breaking $5.5 billion in 2021, that amount fell short of what the region required. This is still far from what the region needs in terms of funding, not just for classic development purposes, but also the negative consequence of climate change, he stated. Though many of the initiatives had only a tenuous connection to climate change, Mr. Dayant noted that the Pacific Aid Map shows a sharp increase in financing for climate change-related projects. Funding for projects which focus on climate mitigation and adaptation is pretty flat, he stated.